Okay, so in this lesson, I just wanted to show you the list of stocks that we currently trade. This list will show you the symbol of the stock, the company name, as well as the industry that each stock is in. You can see from this list that we have a wide variety of stocks and industries that you can trade in. So if a certain industry is really moving, you can trade it. For example, we've got technology stocks, we've got airline stocks, we've got healthcare and mining, games, pharmaceuticals, and so forth. We've also got some foreign stocks that you can trade, like right here, América Móvil is a Mexican cell phone company. We've got, of course, Alibaba, the Chinese online retail company. It's a lot like Amazon. This is a Chinese company, but it trades on the New York Stock Exchange, and so you can trade it. It's one of the stocks that you can trade. So we've got a wide variety of stocks here that you can trade. Now, in addition to stocks, we also have ETFs that you can trade. For example, you got this ETF, DGAZ, that represents natural gas. Now, just be aware that we've got all sorts of different ETFs that represent energy or natural gas or gold. We've got several that you can trade that are for gold. And, you can go long or short on any of these. And so that's great. Please be aware that there are limitations and restrictions. For example, this one, you're not supposed to trade it until you have at least a $500 profit over your trading, which is going to take several weeks or even months before you get that. So that one's going to be off limits to start. Okay. We've got just a few of them that have restrictions, and they're right here in this column. Now, in addition to these stocks and ETFs, we've got two that represent the whole market. We've got the Qs, symbol is QQQ, we're just called the Qs, and this represents the NASDAQ Composite Index. So the NASDAQ Composite Index represents all the stocks and how they're moving in the NASDAQ. Okay. That's just an average. That's just a number. It's not a security that you can trade. But what they did is they created an exchange-traded fund that trades just like a stock that you can trade that trades like the NASDAQ. And if you want to do that, you would trade the Qs and enter in the symbol QQQ. Okay. Now, I don't trade the Qs too much. I do trade the spiders for the S&P 500 index. The symbol for that is SPY, but the nickname, they call it the spiders. Now this one, you're not supposed to trade the first week of your trading, but after that you can. I like trading the spiders. They can move pretty quickly, so you definitely do not want to trade them at the open for the first 15 or 20 minutes of trading. But after that, it can be pretty smooth trading on that because it's a super high volume exchange traded fund. All right. So those are the two that represent the overall market. Now, something else I just wanted to tell you is that, first off, this list can be changed. It's going to change. We're going to expand the number of stocks that you can trade, but we don't want to expand it too much. We want to limit the number of stocks that you can trade. There's a purpose for that. For one thing, we can choose stocks that have enough volume so that they're easily tradable. Okay, but another reason is we want you to be very familiar with the stocks that you trade. There's a huge advantage to trading stocks that you're very familiar with because then you know how far the moves are in the stock. You get a good feel for it and what's going on and how it reacts to certain market conditions. And so that's a huge benefit for you. It helps you to know what the stock is going to do next. I've heard stories about old timers who've traded the same two or three stocks for 30, 40, 50 years and made a ton of money because they were so familiar with how those stocks moved. Well, we're not going to be that specific, but definitely you want to be familiar with the stocks that you trade. Now, in a later video, I'm going to show you more about what to look for as you look for stocks to trade, and how to analyze them, and the risk that you're taking whenever you trade a stock before you get into the trade. But still, nothing compares to having experience watching a certain stock over and over and seeing how it moves. Okay. Now, there's something else that I just want to show you here. There's the VIX. Symbol is VXX. This is an ETF called the Volatility Index, and it typically moves inversely to the direction that the rest of the market is going. Because when the stock market is going up, volatility tends to go down. Whereas when the market drops, especially if it drops sharply, the volatility index is going to shoot up, because stocks tend to drop a lot faster than they climb. Okay, so just be aware of that. The VIX is going to move in the opposite direction of the rest of the market a lot of the time. So we have 77 stocks that you can trade currently. We've got 18 ETFs for a total of 97 securities that you can trade, either long or short. And I've gone over the restrictions on some of those stocks. Please pay special attention to those. And there's one other critical thing I want to tell you about this. You're going to be trading 100 shares of whatever stock or ETF that you trade. Now, there's a huge difference on how much risk you're taking if it's a $10 stock or a $100 stock. Now, we have, stock prices that are all over the board. We've got some that are around $10 a share, and we've got some that are over $100 a share. We even trade Tesla, which is over $300 a share. So if a stock moves 1 or 2% a day, then obviously 2% is a lot bigger for a $100 stock than it is for a $10 stock. So for example, a 2% move is pretty common for, a stock can easily move 2% in a day. So a 2% move in a $10 stock, well, that's a 20 cents. And if you're trading 100 shares, that's a $20 move. That's well within your risk parameters for a trade. Okay. But 2% of a $100 stock is a $2 move in one day. So for 100 shares, that's a $200 move. And that's well beyond your risk, how much you could lose or make in a day. So just be aware of that. You really want to start out with stocks in the $10 to $60 range is about right. Possibly a little higher than 60, but you'll want to analyze and review every stock before you get into a trade and start to get familiar with it, so you understand how much risk you're going to be taking. Now, I'm going to teach you more about that in a later video, but just be aware at this time that you're going to want to trade stocks that are, in the lower half of the range of stocks that we trade, okay, to be in the right risk parameters for you. All right, so go ahead and take the quiz now, and when you're ready, move on to the next lesson.